Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, so let's keep going with our analysis on euro currency in general. Things that we have discussed recently has worked, so it's about the grabber and some intraday performance that we have discussed. It's talking about the possible long entry, considering different options for this purpose. So all of them actually, well, mostly we could say has worked. So currently it seems that market stands aiming on this destination point that we already have specified, approximately this scenario around 112.50. It will be very close to the daily overbought, so this week hardly we will get any straightforward upward breakout because of the overbought. At least it would be better to not make a bet on it. So maybe by some reasons, by some news or some circumstances, it could show the breakout, but probability suggests that chances for that stands not in our favor, just because of the overbought area. But if we'll take a look at the longer term charts, we will definitely discuss this in our weekly report. The overall picture looks really interesting for euro currency and stands positive in terms of the possible reaching of the targets that we have specified in the weekend, particularly speaking 114, maybe even somewhere 114, 115 area. It's really possible. Based on the performance on the dollar index, based on the performance of the 10-year bonds. So it's difficult to say what will be in excess of these levels, but it seems that an area around 114, 115 could be reached by the euro currency relatively soon. On other markets, if we take a look at the cross-market analysis, this, by the way, grabber that we talked about has been formed, but currently we already do not need it. It's just because market created the new top compared to this one, and minimum target as of this grabber, as this grabber already has been reached. So just confirms our bullish view on the current performance. So we're mostly watching for the butterfly that stands on the daily chart. If you take a look at the dollar index here, you can see that market is challenging. So this monthly chart here is dropping below. Here showing significant downside action yesterday and challenging this support area. This is very important. So downside breakout could open the door for further appreciation on the euro currency as well. On the 10-year bonds, we also see some reversal on the daily chart, and it's more interesting that here was actually 127 extension of the butterfly. We've got this pullback approximately 30%. Market's turning down once again. The point is that around 3.2, 3.4 area stands long-term, I would say all-time confidence support area. And that will be very important level. So around target of the butterflies, which will be 1618. So market could follow to this area within the next few weeks, probably 1-2 weeks, if it will be gradual action. And then as probably the yields could stabilize here for some time, because this is really very strong support area. That in turns, this drop for more than approximately 0.5% in the yields could lead, or at least it will be supportive factor for performance on the euro, because of some weakness in the dollar should happen due to the decreasing of the dollar yields. This is just simple logic that we have. So on lower time frames on the euro currency, what we have on the full time frame chart, everything just great with the triangle. It has been broken up. Market right now stands in some retracement. Probably here we've got first target completed, some kind of the ABCD or something of this sort. Probably is done, right? So you could see the ABCD target has been completed to the upside. Market now is turning down a bit, and here we need to keep an eye on a few levels. So take a look on hourly chart. First level is of course trend line of the broken triangle. Preferably market should not break it down. So if you haven't taken a position or you would like to take the long position here, first level that you could keep an eye on is around 1160. And next one is also seems interesting. It is 1140, 1148. Why? Because this is confluence and it stands around of the triangle. This is really great some indicator level. If market really bullish and it keeps the bullish context, it should not break it down, because in this case confluence will be broken, market will return down inside of the consolidation. This will be not quite bullish performance. So we could treat this area as a kind of the invalidation point. Other words speaking, if you have taken position yesterday somewhere in this area, you probably could move stops to the break even, see what will happen. Here's, by the way, guys, interesting stuff. And take a look. Once Gartner's T+2 has been completed, minimum target of patching has been done. So market has shown mine the 30% retracement. So that's what we talked about yesterday. That if you would like to take the position, wait when the 222 will be formed, and then try to take the position on some pullback. But if you plan to take position today, you probably could use this level as a level for hiding the stops. Or for instance, you could take position here and hide stop below this area. Or if you would like to below the lows of this thrusting action, it's also possible. Or if you suggest that market should drop lower to confluence, you could try to take position in the confluence and hide the stop below the confluence or also below these lows. As few options, multiple options exist how to act in the current circumstances. But based on recent performance, it seems that combination of the trend line and the first fib level seems more suitable to consider position taking, because market could not just reach the confluence. So this also could happen. But this is really minor tactical details. In general, you understand the overall context, what's going on. And so let's keep following it. The butterfly that we have here on the hourly chart with the 1618 target around 1263. So it's approximately in the same area where the daily target, major XOP, and daily butterfly targets also stands. So also around the daily overbought. Intermediate targets, some first targets 11221. So the first butterfly target. So that's what we have on the euro currency. Let's keep watching.